Is it on? Good morning, everyone. My name is Mila. I work in TONIK since the inception stage, since the whiteboard stage somewhere in the small office in Singapore. I'm Ukrainian, and I'm a chief growth hacker. For those who don't know what it means, it's basically a universal soldier that does whatever it takes for the company to grow, whatever it means, marketing, sales, product, tech, partnerships, platforms, anything. So that's, for some unknown reason, I was invited today to speak about our view as a digital bank, as a neobank, on where we are today, where we have to be, about the fintechs and trust, and where we stand in between fintechs, neobanks, digital banks, and traditional banks. And that's how I want to start our journey. First, we need to find the tech. Hey, first, let's look at our big financial family, banking and around banking, and see which relative is eating up the lunch in the end of the reunion. So, who are the fintechs? I just put a simple Venn diagram just to shape the context of the conversation. Who are the fintechs? They are mostly limited, focused on a particular problem. They are solving the problem. They are not being built into banking menus. They are built around user problems. They have simpler license and reduced requirements from the regulator. What we neobanks take from fintechs, we share the DNA with them about being cloud native, mobile first, UX centered, real-time, transparent, and also having a mass market ambitions, and tapping into the unsecured. What did I do? Okay, so you put the tape here, that's the sign for me not to press now. And we have the OGs, the actual traditional banks, and this is something they do that digital banks or fintechs most probably will never do. This is corporate lending, this is having physical presence, this is cash management, this is checks, these are some legacy systems, and this is affluent segments or anything that requires deep customization. This is not acceptable for fintechs and neobanks because it's not scalable, it's not easy to automate, or anything that needs personal touch, personal conditions of the loan, hence the affluent and corporate lending. It will most probably always stay with the traditional banks. And what do we share in common? The DNA we share in common is that we are also licensed. We are insured, we have wide range of services, wider than fintech, but never wider than the traditional bank. And of course, we are compliant because we don't want to lose our license. So basically, neobanks are kind of a fintech with a seatbelt. So let's take a small glimpse into the future. Yeah, it's not here yet, but it's there. We can take our DeLorean machine and go to the future, to the other island nation. Which island is that? Who knows which island? Okay, hint. It has really developed fintechs and digital banks and neobanks. UK! Yeah, exactly. Thank you. So let's see what happened in UK. So digital-only banks now reach 50% of UK adults, and that's in the last 6 years. They grew from 16% to 20 or to 50. The primary debit card increased in last 4 years from 1% to 9%, but those card holders, they spent 20 times more than the traditional bank holders. And in the same period, the market share of the big 6 UK banks decreased from 85% to 71%. But how much time it took them? Just to share, so these are the big fintechs of UK compared to when it started until today. Monzo is 7 years on the market, Sterling is 8, Revolut is 8, Klarna is 10 years. To give the context in Philippines, we started in 2021, we launched, and that's when the other digital banks followed. So basically, you guys, traditional banks, have around 4 or 5 more years until this happens here as well. But we will also discuss what exactly holding us back. But there is another way forward. Apart from digital and neobanks just cannibalizing the customer segment of the traditional banks, there are the completely different ways of cooperation. I'm pretty sure you see a lot of headlines about big old banks buying the fintechs, because fintech for a bank is a shortcut to acquire expertise and technology to serve their customers better, and that's what they do. And most probably events like this will happen in Philippines as well, because the universe does not tolerate the entropy. There should be too many players. They will aggregate, there will be mergers, acquisitions, and most probably this will happen here as well. So, but there is another way. One more thing about the fintech is the big tech, which can screw us all up very fast in just one day, like the weather, but it will never be the same again. They will not tell us what exactly. They will disrupt the whole market, but there will be the signs. And this is just one of the signs. For example, 3 days ago, there was a Google I/O event when they announced, out of many, many things they announced, there is a sexy AI, video AI generation, and so on. But they also announced that their buying agent is ready to make transaction, agentic checkout. So, and that's how it happens. Just a small announcement and tell me, are your credit card systems or are your anti-money laundering monitoring ready for agentic payments? Something that has been trained and trained on human data, the human behavior. Do you know the agentic behavior with the transaction? How are we going to live through that? So this is how the fintechs, they can be our friends, they can be part of the traditional banks, but they can also make our life much harder. But let's see on the, I never expected myself to put it in one phrase, but legacy of the fintechs. So what they gave us so far today. First of all is embedded finance, which eats up credit card segments significantly today. This is BNPL upon checkout. This is all the microloans upon checkout, embedded in the e-commerce checkouts, and insurance sold into the hailing apps. That's how it eats up the segment. Then, what else they gave us? Financial inclusion. Because serving on the underbanked people is no longer a social responsibility, no longer a lifetime mission. It's already a viable growth strategy. Those thin profile customers have been scored by telco scores, by alternative scores, app scores, and others. And actually now, starting from Sari stores and gig workers, they're already bankable users, and that's already the viable use case. And this is thanks to the fintech. What else? They give us stackable and API-first banking. It enables very fast growth for small players. Look at us. We launched the bank in 1 year, and that was through pandemic, because we didn't build everything ourselves. We stacked it. It's API-first, and we took KYC from one system. We took malware protection from another, transaction monitoring from another, obviously a card management system, so you stack them all together, and that's how it works, and that's how we were able to launch within 1 year. Security and trust. It is moving from brand and policy to being actual product. How does it look? It's not anymore the disclosure or how you call this paper that you take the risks upon yourself on your transactions or whatever. That it's not anymore about policy in the paperwork, nor now it has to be the part of the product itself. I can give you an example. Our app, it does not start if your phone doesn't have a passcode. If it doesn't have the code, the fingerprint or whatever, the app will not start. That's how you build it in, so simple, into the product. And of course, it's a biometrics, it's a fingerprint, and both onboarding and login, because nothing is more reliable as of today as Face ID. And that's what I use every day in TONIK app. That's my favorite login. It's super easy, and I'm absolutely sure it's unhackable because it's server-based, it's not even device-based. So that's how the security and trust are moving from brand into the product. And of course, it's not just about tech. It's also about disclosures and user experience, because if you sell something to, let's say, a loan to the customer in the app, you're able to explain everything, give him more information, being transparent, no hidden fees. He'll understand it all. You walk customer through it in the language, and the less he understands about what's going on with his financial products, the less he fears you. So that's how not just the tech, but also transparency in UX is built into trust. What else they've given us? Oh yeah, the demand for speed and quality. For now, they basically killed the 8 to 4 hours work. Now, if it's not 24/7, when it comes to approvals, when it comes to transactions, when it comes to customer care, if it's not 24/7, it's not working. So it should be really fast, and it should not just be fast, it should feel fast, safe, and easy, but at the same time human, and those are the expectations. Already, they disrupted, they completely rewired customer expectations, and that puts a pressure on the whole banking system in general. And I read some research, again, that Island Nation, the UK, that 88% of the customers were ready to abandon the transaction if they see at least smallest friction. While I'm probably one of those 88%, I think in Philippines it's not yet like this, because there's still a lot of frictions. We will be talking about that later, and you all know what kind of friction masters I mean. Yep, that's how it's changing the market and completely reshaping it. Then, tokenized assets and micro-investment takes a root. What we're talking about here, it's really small investments. For example, I don't remember the name of the app. Loft AI is the US app where you can buy tokens starting from $50 of the rentable real estate. And you will get the rent revenue from these tokens, because each of them is a piece of someone's apartment somewhere in Manhattan. Or there is another startup like this doing it in Brazil as well, and that's how it is. And also crypto investments, of course, and that's where you can serve not the affluent customers, but very thin profile customers, even those people who earn, I don't know, 15,000 pesos per month. They still can start their journey of wealth building because the product meets them where they are. And yeah. Then what else? Cross-border finance goes local. That's, yeah, in general, most probably the next bank, the next generation of banks, they will not be Filipino banks. They will be cross-border technology firms that will be locally relevant. Because now cross-border becomes like super easy. And if you see on the volumes, it's incredible. What Wise in last year, it reported $149 billion their own turnover of transactions cross-border. Revenue, I think 54 billion. So I cannot yet know the exact share of market, but definitely it is eaten up from SWIFT transaction and all the legacy banks transactions at all. And of course, what it gave us the support through pandemics. Pandemics is an interesting thing, because fintechs, they always boom and bloom when something bad happens. In case of pandemics, of course, something that was nice to have before became a lifeline during pandemics. That's obvious. Yeah, the cross-border transactions. You receive the freelancers, they receive money in dollars, but they spend it in Philippine pesos. No middleman needed, no need for cash to go to the currency exchange counter, blah, blah, blah. And you know very well how much it helped us. But also another example is that how did Fintech start? It was 2008 crisis. And the reason was because the crisis left too many financial and tech people without jobs and with too much free time, and also the trust of the legacy bank, it was very much undermined by the crisis, and that's what they gave birth to fintechs in general. So, okay, I need to speed up. What is holding fintech back today? Oh, I don't need to speed up, I need to shut up. Correct, or I have a couple more minutes? 2 minutes, okay. So what is holding fintech back today? I think those are obvious things, and I will not stop on that. It's obvious the lack of national ID and unreliable credit bureau records. Until now, sorry, I know it's a good progress, but it's still, I calculated. The bank number 1 in this country, it has 26 IDs that it accepts. Some primary, some secondary, and if you compute all the combination of IDs, it's 331 combinations of ID. And now can you imagine how the credit bureau record will look like? Every customer has 331 different combinations to pass his data and keep recorded. So what shall we all be doing to create banking by choice and not by force? Trust that used to be built by the years of relationship and brands and advertising, now is built by the product. Now, today for digital customers, trust is built by the tech. It's self-services, limits, permissions. The more you give it to them, the more controls you give it to them, the less they fear your system. App stability. Trust is not built by years anymore, by your uptime of your app. And we will come to that on my next slide, and after that I think I will cut. Then, of course, API first expect. Transaction reliability and auto-reversal. Microservices instead of batch processing, microservices are your resilience. If one falls, not all systems falls, it's just one certain thing falls. No more batch processing, and that's how you stay up all the time. That fraud detection engine, real-time alerts, biometrics rather than OTP, and digitizing workflows, it's all quite obvious, unfortunately. I will get. That's a piece where we have to be really probably a bit embarrassed, but what my question here is that Japan is not really doing well here. I wonder what happened to them. So this is the Play Store rating of top 3 banks. In Philippines, it's 3.2, average. If you take top 10 banks, Play Store will be 3.3, and App Store also will be 3.3, and I think thank you Union Bank for pulling it up, because that's the only bank with a good rating in the top 10. So, but knowing customers' pain points was never so easy. You have everything on your hand. And again, I like when we talk about AI, but AI is how you do things, it's not what you do. So how about we first address all the pain points that we already know, that are already there. I mean, if you want to use AI, use ChatGPT to make an analysis of your Play Store reviews. Yeah, and then you will know your top 3 problems to fix first. Yeah, and here I just wanted to show you how we learn from the best, sorry, okay, so I just wanted to give you maybe a homework. The best app, I actually adore it. It's Nubank, Brazil Nubank, and that's just the list of their security features that I absolutely love. They are my favorite, and they're big and they're profitable, and those are the features that they do, and it's amazing, especially the mode of the street or how the face scan is switching off your app if someone is looking into your phone. It's just covering it, blurring it. But yeah, okay, then it will become your homework if you're really interested in that. And yep, thank you. Any questions?
Thank you so much, Mila. Let's give a big hand for TONIK.